Good morning, traders. It's 8 a.m. Chicago time on Friday, the 3rd of March, 2023. Happy Friday, all. This is episode number 2422. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's follow the routine, right? Same thing every day. You're probably noticing I'm doing the exact same thing day in, day out. And there's a reason for that because it really trading is all about process, following a process. So during times like we're seeing currently where the market is just tough to trade, at least for me it is process that keeps us rooted in what works, okay, even though it may not be favorable to it at the moment. So our process is to look at the pre-market summary sheet from Convergent Trading. Of course, you can get this yourself when it's posted every morning on Convergence Twitter feed. You can get that at twitter.com/CONV trading. Risk on sentiment. I mean, it's a follow on from yesterday. Really strong risk on sentiment this morning. The big news is the Eurozone PPI came out this morning and it was very, very weak. The PPI is a producer price index that the value of the PPI kind of translates into CPI. I think it's like a 4-month lag or something like that. But the PPI came out at negative 2.8% for January, was expected at negative 0.3. The prior is plus 1.1. So the difference between December and January's PPI is a drop of 3.9%. That is quite significant month on month. And it's kind of contradicting the path that we have been on, which is higher inflation indications, more anxiety about Fed hikes and so on. This kind of goes in the opposite direction. So, and then last night we had a strong Caixin Services PMI and it's slightly higher than expected. The China National People's Congress starts this weekend. The significance of this is that it's kind of like an analyst call for macro people. A lot is announced during this Congress. China's position on various things is going to be known. Fed's Waller, Fed may need to raise rates beyond December central tendency view of 5.1 to 5.4% terminal rate if incoming jobs and inflation data does not pull back from strong January readings. So it's all about next Friday's jobs report. Really, really important how those numbers come out next Friday. I'd hate to be one of the people preparing that report at the Department of Labor. So it's really important that we pay attention. Next Friday is likely to be very, very volatile. Fed's Bostic firmly in favor of 25 basis point hike path and could be in a position to pause by mid to late summer. This came out actually yesterday at about, 1 o'clock. Because I was in a webinar, maybe 12:30 Central, 1:30 Eastern, and it caused the market to shoot up. This was the cause for the breakout, supposedly. Continued hawkish commentary from ECB speaker. Costco sees inflation starting to ease. Today, we do get the ISM services at 10. This is a significant figure. Pay attention here. The expectation is 54.5. This is likely to move us. So if you're in a position going into 10 o'clock and you don't have cover, in other words, you have not covered your risk through scale outs or whatever, it's probably best to close that position ahead of time, in my opinion. So that's at 10. At 11, Fed's Logan speaking, Fed's Bostic speaking at 11:45. Then 3 o'clock, we get Bowman. And 4:45, we get Barkin again. So that's where that stands. The S&P, statistically speaking, the S&P is in a multi-distribution profile, clear price discovery in the overnight session, 219,000 contracts traded so far, with the inventory being 15% long because a lot of it took place. The overnight session, the Asian session, was really sideways, extremely compressed and balanced until the PPI number came out of the Eurozone, and then we started to kind of lift. So actually, we started lifting. Yeah, we started lifting. It was completely sideways. My PNF charts weren't printing any bars because there wasn't enough movement. And then when the 5 a.m. Eastern number came out of the Eurozone, the PPI, that's when we shot up. So it's in a multi-distribution price discovery mode. We're above the 4,000. We're trading at 4,009. We keep pushing the high here. The point of control is 39.80 and is likely to be that 39.88 area is likely to be a base for today if we pull back. So that's where we stand today. Crude taking back a lot of the progress it has made over the last couple of days. Crude put in a very clear breakout. I expected crude back at 78 and 80, and it appears to be going in the opposite direction today. Very, very aggressive. And so that's where that stands. So let's look at the charts. Here's your composite. Here's your composite chart. This is an RTH only ES chart, day chart, and this is where we are. So let's, I'm doing this to make sure we're not, the profile on the left is 1 month. The profile on the right is 252 days, which is 2 years. I just want to make sure we're keeping track or we're staying connected to the overall picture. And so we have an understanding of why it is that the trade has been just god awful. And what it is the market has pulled back from, the upper 4,000s, and then it's kind of made some waves down, and it's right now, and it has been in a very, very sideways pattern. We were not able to get to 39.20 yesterday. With the low yesterday was 39.31 on the RTH, 39.25 in the overnight session. So we had responsive buying immediately on the open, and we were not able to actually accomplish what was expected, which is to push down into the 39.20. Here's the profile chart. Nice set of single prints here. We have poor structure underneath us. The overnight low is at 39.74, which is right here, right there. We could not get into the poor structure, and we are currently trading up here. So this is a very clean reversal, very bullish engulfing bar here. If you're a candlesticker, we opened below the range. The idea yesterday was that we would push back into the range and then squeeze down into the 39.20. We were not able to do that. What we did is what I showed here on this chart, which is to respond, then use settlement and the point of control as a base, and then continue higher from there. So this is a very strong reversal yesterday, very trendy. This is not a B-shaped profile. It looks like a B-shaped profile, but remember, a B-shaped profile is one that starts at the far end, comes down, and balances at the low end. This is not what happened yesterday. We were in balance until the news, and then we broke higher. So we have opened below, finished above, and engulfed this entire day, these entire 2 days, one being a balance day and one being a double distribution day. So what we have here, it looks like, is a base. So now we have impulse down, pullback, continuation. We managed to extend that impulse low of 47.50 to 25 and 31, 25 overnight, 31 day session. And now it is very likely that this is to squeeze back up, and we're looking at coming all the way back up into the 40.80 area is the next key area to test. So this is where we are. If you recall, we have double TPOs right up here, this 40, 90, 50, and I think there was a second double TPO right here. So this is what's vulnerable. This is what's vulnerable in the structure. So I expect this to continue and take out that 24.75 high from last week, but we have a week high right here at 34. So this is very likely to be tested. That's a week high. And then 90.50 is a week high as well. These become really important targets up above. So today, it's really important to see what kind of a response we get. Yesterday's move was on news. I was skeptical. It's hard for me to shift gears from breakout, come all the way back, break down, come all the way back. That's what we've had over the last, month or so. It's hard for me to see a breakout, buy the pullback, and be confident that the continuation will happen, which it did yesterday, especially since the breakout was on news. And on news, we look for what? We look for the SOC, the scene of the crime. We look for the market to go back and test that area. And John, what was the SOC there? It was like 50-50, I believe. It was 39.50 is where this thing launched from down here. Where's 39.50? So we have it looks like we have single prints down here. So this is the SOC for yesterday's move. Remember this number. It's marked on your chart if you're a CT member. It's marked on your cloud levels on your chart. And overall, this is where we're likely to come back if we fail or get poor news, or the ISM number today doesn't go well. The ISM services number doesn't go well. We are very likely to find ourselves back in that 50 area, right? So that's how things are shaping up. That's the narrative. That's the big picture. Okay, how do we turn that into a trading idea? So first of all, yesterday was a price discovery day. I will not merge that. So what we did yesterday is we came right back. If you recall, this has been a prominent number here in the 92. We came right back to the 92 and we pulled back from there to close and settle at 84.75. This morning we're above. We're into this kind of acceptance zone. To me, any pullback this morning is likely to be bought. So I'm watching the quality of any responsive selling. We're opening in a gap. Gap rules apply. We want to watch to see, does the market have the ability to pull back and hold lower prices? If it doesn't, then you want to trade in the direction of the gap. The direction of the gap is up, so long side favored unless we fill the gap. So the only thing that changes my mind with this is we fill the gap and we start moving into the prior range. We get below key references, the full session VWAP and so on. And we look very, it moves down quickly and then it just has a hard time pulling back, moves down quickly. That's where I'm starting to get short. So this morning I'm watching carefully, hands off the mouse to see if we get a strong response towards yesterday's settlement for a gap to settle trade, or does it kind of hesitate? In my opinion, it's very likely to hesitate this morning. Does it hesitate, have a hard time at 4,000, holds the base of 4,000, and then starts to take the other side of the opening swing? In that case, I'm buying pullbacks, and that's all she wrote. If I'm buying pullbacks and we open at 4,009 with a low of about 4,000, that puts the 34 week high in check. In play, that becomes a key target. The 34 double TPO high, the week high, becomes really an important target. And then I doubt that the 90s in play today, because that gives us 90 points of range, which is 2 standard deviations away from, we would have to have some incredible news today to get 90 points in this kind of environment. So today, pullbacks, target 34. That's the number we're looking for today, 34.50. week high. Okay, not weekly high, but weak as in not strong high. 3450 becomes the target. Otherwise, below 4,000, we're going to watch it drop below 4,000. A weak retest of 4,000 doesn't trigger a short. What we want to see to trigger short is it gets back to settlement and is not able to get back out of the range. If it's not able to get back out of the range, the trade then becomes a short for the 50-50, and that's well within range. That's about 35 points, and it just takes back what it did yesterday, and then you're holding for the point of control beneath there to go back to the prior day's balance. The point of control is at 47. So then 50 and 47 become the targets on the short side. That's the narrative. Those are the two main trades for today. Now, I'm going to take a moment here and ask you, does that seem like fluff, or is it specific enough? Or do we need to get into, okay, I need to see this in the footprint and I need to look here and that's the entry price, here's my stop? Because if I get more specific than this, I start to interfere with your ability to create and control your own trade. Is that, giving you the ideas, the long idea and the short idea in a package and the reasons behind it, is that enough to get you to then focus on what you're going to use to enter? You may use a fib on a pullback to enter long. You may use a fib on a pullback to enter short after it fills settlement. You may use a moving average crossover. You may use a MACD. You may use many different things, and it's not to me to dictate to you what your entry should be, because then I should just take what's called power of attorney on your account, which I don't want to do. Then I should just trade your account and charge you a fee for it, right? The idea here with the Trader Bite is to have a legitimate place, in my opinion, a very legitimate place to learn the story, to learn to form a trade, to have a strong basis for the trade. But how you enter it, what trade you put on, what triggers your trade, this is your part. This is the part where it has to be highly personal and it becomes something that you create, because you have to own it, because you're going to put on the trade. Okay, so I get messages here and there saying, yeah, well, that's all great. I could do what you're doing here and do my own videos, but you don't show how you're going to trade it. Well, I can't show you how I'm going to trade it because it hasn't happened yet, for one. And two, if I get into the detail of here's what I look for this particular, then I just generate much more confusion and many more questions as to why I took that particular price and why in this context this bar meant something, but in another context this bar meant something else. And it just becomes a very nuanced conversation when at the end of the day you have a ton of tools for how to actually execute or enter the trade. The reason people get in and close good trades early for 1, 2, 3 ticks is because they're missing the context and the narrative or the foundation of the trade. And this is what I'm focusing on. The execution, your executed price, the outcome is random. The execution price is significant, but as long as you size risk versus reward properly, the execution price doesn't matter as much as you think. It is significant because that's how you make or lose money, but it's the idea, it's the ability. The problem is not that people can't click the mouse. People are clicking the mouse. The idea is they can't click the mouse and stay in the trade and stick to the plan. This is what I'm addressing. So I do get a lot of comments on videos, and I appreciate the feedback. I love feedback because only people who are paying attention and who care provide feedback. I do care about that, so I'm not pushing against it. And I'm not offended by it. I'm just explaining this is what I did for prop traders. I didn't tell them, hey, click now, get out now, get out now, get in now, get in now, get out now. I didn't do that, because if I do, then I should just trade bigger size. How am I diversifying my risk by telling everyone how to trade exactly like me? So instead, I go through the idea, the plan for the day. This is our morning huddle in prop. I've been sharing it with you for 2,422 episodes now, And it's up to you to then know, okay, I'm leaning long unless this happens, I'm leaning short unless this happens, and this is my entry and this is how I'm managing the trade. That's on you. Nobody's going to be able to help you with that, because you might be a scalper and just scalp a big move down, or you might be a bigger swing trader and using 10-point stops and 20-point targets. I'm not to dictate what that is for you. Anyway, that's all the time we have today. Don't forget to hit the like button. If you have not subscribed to the channel, it's free. All that does is it allows the channel to have more visibility to other traders. Please subscribe. There's a link in your live chat to go right to the subscription button. If you subscribe, don't hit that button because it'll unsubscribe you, and hit the like button. And if you want and you have something you want to say to get off your chest, be sure to comment on the video. Comments are allowed. Take care. Cheers.